Hello and welcome, everybody. This is the Hot Corner Insider live strategy session. We do this every Wednesday at 1 o'clock Eastern Time right here on Stock Market TV. I am your host, as always, Steve Straza. I'm the Director of Research at All Star Charts. We're going to talk about a new theme today. Before we jump into it, nothing we discuss here constitutes any solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. Good afternoon, everybody in the chat. Hey, Wavy. Hey, Mary. Hey, Curtis. Dawson. Growth versus value. We've all heard of it. I think we talk about it a little bit. Maybe a lot of bit too much. When we're talking about growth versus value, we're saying these stocks versus those. I'd rather own, this sector or that group over this sector or that group. I think rotation isn't always so perfect where it leaves one theme or one area and moves into another. In this case, we're talking about factors. I think in a world where we get rotation into value or cyclical groups, I think it would make sense for certain growth groups to keep working. Sometimes it's a market cap situation, right? Where a lot of times rotation into value also means rotation into small caps. And small cap tech might be working, right? Which you wouldn't think in a value over growth environment. Hat stays on, Curtis. We're going to talk about crypto a little bit before we finish up. This is small cap growth versus small cap value. This is the Russell 2000 growth versus the Russell 2000 value index. This is a failed breakout. Ugly momentum divergence, supporting a downside resolution or a failed move back into this old range. This would say value, at least over the short to intermediate term. This is the large cap growth versus value ratio. This is the Russell 1000 growth versus the Russell 1000 value index. This is a multi-year consolidation. Looked like it was going higher. This reminds me of XLK SPY or NASDAQ 100 versus the Dow or the Russell. The pro-tech relative trends look this way. That's all this is. Back in the box. We're going to invert this in the next chart and just break it down into two sectors. Same story. This is now XLE relative, breaking back upward into an old range as tech or growth relative breaks downward into an old range, right? So it's a bull market. Some significant sector rotation or rotation among different themes or different niche areas of the market or rotation from large into small or from US into ex-US is actually healthy, very constructive. Ralph Acampora calls rotation, particularly sector rotation, he calls it the lifeblood of a bull market. There's nothing to worry too much about or run from, but you want to be aware of it because the way you position yourself in a bull market is going to make all the difference at the end of the day. If you want to outperform the market, the only way to outperform, and the S&P 500 or the, God forbid, the NASDAQ, we have some really tough comps, right? These are not easy benchmarks. These large cap weighted indexes. So you have to be in the leaders. That's the only way to generate alpha or outperform the index. Energy is telling us for a couple weeks now, you could say a couple months, you could say all year. Look at the momentum this year in the lower pane here. Energy is suggesting that they're going to be an area of alpha, right? Where we can generate alpha. Back into the range At the same time that energy is scooping higher back into its old range, right? And now materials, we're talking about value over growth. It's also like a cyclical versus growth ratio. We're talking mostly about commodity stocks versus growth. This is materials relative to the S&P 500, similar to energy, hooking back above a key support level at the former lows, hooking higher into its old range. From failed moves come fast moves. What if this were to run all the way back to the upper bounds of this range, this ratio? Still doesn't reverse the primary trend, but you could probably make a ton of money being long material stocks in the meantime, right? And then meanwhile, the absolute trend, this is the large cap materials sector spider XLB, new all-time closing highs on a weekly basis last week. We think materials like energy are an area where we want to focus a little bit more on and identify some new long opportunities. Oh, it's just popped out here. And we're seeing it from our insider list. This is today's hot corner list. Alpha Metallurgical Resources. This is the best stock off of the pandemic lows in 2020. Coking coal stock. $4.5 million investment. Popped up on the Form 4 on our hot corner scan. Talos Energy. This is an E&P name. Second time it's been on our list this week. Then we have Tommy Tuberville down at the bottom of the list here, buying oil tankers, right? These marine shipping stocks, Star Bulk and Golden Ocean Group. So the insider activity supports this potential rotation that we're seeing into commodity stocks, into energy, into materials. So let's look at some of these shippers now. This is our equal weighted marine shipping index. Talk about a nice reversal. After being so bad for so long, these stocks were secular laggards. The entire energy sector really was. SBLK, as long as we're above the range lows, this reversal is in. It's been like a decade-long reversal in the making. I think we keep climbing up the right-hand side of this base. Golden Ocean, probably more tradable. Get a little bit of weakness anywhere back towards this $10 level. This anchored VWAP from, I think it's 2014, comes in just above 10. I think that's a pretty ideal entry. You could use the pivot highs here. That's a nice trade, 25. But anything back towards 10, the structural trend has reversed. And you could be long over longer time frames. A couple new names. Actually, before we get into it, one more on the commodity stock theme. Nucor is working. So this is NUE, Nucor Steel. 176, if we're above their target 270. I think copper stocks are starting to look really good. We'll probably have Freeport-McMoRan on here soon. Wish we had a little bit better representation in the materials sector from the hot corner. But I'll just, some that we really like. Reliance Steel, Nucor, Steel Dynamics, Southern Copper Co. All of these industry leaders in the materials sector are breaking out in a big way, really. Nucor's at the top of that list. I think this is an excellent vehicle, but there's also a bigger theme there in the sense that the leaders are leading, which makes me think that, going back to the XLB S&P 500 relative trend, scooping higher here into its old range, I think this leadership from materials has legs because the best stocks are breaking out in a very big way, and that's a great sign. AZZ Inc. This is a new one. AZZ, President and CEO, Form 4 filer. Look at this breakout. 68 is that level. This is like an 8-year base breakout. Really nice. If we're above 68, target 98 in AZZ. This is a new setup. Sirius Point. Not to be confused with Sirius Radio. SPNT. Nice multi-year base here. Just keep hitting this level. 1150, 1250 level. We're above there. Target 17. Calaris Inc. CAL. This is an apparel store? Well, what do they sell? I've never heard of this Calaris Inc. Apparently it's a retailer. This is a 20-year, almost 20-year base breakout. This looks like a financial. One of those pre-financial crisis bases. Principal Global Investors, Form 13 filer in this one from last year. 38 is really the level for me. You probably get confirmation around 40. 40, 40, 75. Those 2018 highs right here. We're above 38, target 60. Okay, crypto, real quick. Coinbase has been really good. How much more do you want from it right now over the short term? I think you got to be patient. Up 4.5% here today. MicroStrategy, while we don't have the chart, I know a lot of you are involved. We talk about it a lot here. It's the same thing as buying the breakout to new all-time highs in Bitcoin, right? So Bitcoin, we talk about, 70,000. For MicroStrategy, it's about 1,300. We're above there. I think you continue to be long. And again, it's the same thing as buying a breakout to new all-time highs in Bitcoin, which we're still right there. Hasn't completely happened yet. Hasn't totally happened yet. Another vehicle that I think is worthy of our attention right now, and I'm hot and cold with the Bitcoin miners. I don't want to own them long term. I've never owned the common stock in any of these things, but I've traded them well, consistently since last year. I think they are proven crypto vehicles. We have MicroStrategy, we have Coinbase. Mara has been so good. ClearSpark or CleanSpark at CLSK is another one that I've been kind of dabbling with. They seem like they're waking back up here. They didn't participate over the past few weeks as Bitcoin has just completely been like almost vertical higher. Now Bitcoin's kind of consolidating, digesting at these old all-time highs. And something like Mara is again retesting just such a clean level. So while I don't love the intermarket, right, from a sense that Bitcoin was working, the Bitcoin miners were not, I love a clean chart. I love an asymmetric risk reward. You can get long here, at this massive polarity zone that has worked for us time and time again. So you could limit your risk to, I don't know, $1, probably less, depending on how tight you want to keep it. But this is that area. Maybe you give it a little bit of a cushion, not too much though. I think anything below this AVWAP from the old cycle highs would be too much, right? And then these stocks, when they're working, they move 10, 15, 20, 30% in a day. So your target, at least, for tactical trade here would be in the low 30s, 31, 33 in Mara, these pivot highs. So that could be a really nice trade. If you believe in crypto, if you think we're still going higher from here, this is just another one of those digestions or corrective phases, and I think Mara is a really good vehicle right now. Notice how different it looks from something like Coinbase, or MicroStrategy or Bitcoin itself, right? So this is definitely like a catch-up trade. Some would call it too cute. It's worked for us before. Why wouldn't it work again? I like it here. DraftKings. Put new money on this one just this week in the options market. Don't love today's candle, of course, obviously. We were kind of talking about it internally, and I was joking. I was like, guys, is this too easy? Is this like too simple? Because we put on a kicker in DraftKings, got long some short dated calls into the Super Bowl, like right here, this little coil here. We had a triangle drawn like this. We got this little gap and go here. And the thing rallied for like 4 weeks, just steadily higher almost every day, into and just after the Super Bowl in like mid-February. Then again, like we've gone through some corrective action here now this year, right? Oh no, this was it. This was the Super Bowl rally here in January, right? January into February. And then we've just kind of consolidated since, I don't know, middle of February. So a little bit over a month now, coiling in another triangle. Why wouldn't March Madness have the same effect on the stock that the Super Bowl did? Not only are these companies like, obviously they're seeing an increase and an uptick in business, right, and revenues during these major sporting events. These are online sports gambling platforms, but they talk about it. And then people like Jim Cramer talk about it. And then people like Wells Fargo and Goldman Sachs and other boutique research firms write analyst notes about it with sexy headlines, right? Like pick DraftKings for your Final Four. And then the notes go viral and then they talk about it on Reddit. And then Cramer keeps talking about it. And it's just, I'm not saying from a long term investment standpoint, that's a good strategy, but for a trade, sentiment matters. Those are all just short term catalysts. Every new person who comes on and talks about it. We, some friends who are on CNBC who I know like this name. Maybe they come on halftime report and talk about it. Ticks higher, 1-2%. We're just talking about trade here, right? So I think the Super Bowl trade worked really well. We took it from like 33 to 43, whatever that is, 33, 40%, I think. So from the, just coming into the year, the early January lows until the recent range highs, yeah, about 40%. I think this one's super tradable as it continues to climb up the right-hand side of this base. I think long term, we want these old all-time highs. We continue to be long with those old highs in mind. But, trading these little short-term continuation patterns, these pennants or these bull flags within the context of strong primary uptrends, it's the bread and butter, right? We do this all day in a bull market. So I think we can buy this flag or we buy this pennant just like any other. Trade it higher a couple weeks to a couple months, probably not even a couple months, right? I think there's a good trade here. That's it for this week. Let's check the chat real quick before we get out of here. As always, questions, comments, concerns, want to say hi, shoot us a note, info@allstarcharts.com. You know how to reach us. Oh, it's your favorite show? I love Canada. I love Canada. Straza, aren't penny stocks weird in a sense that they were pumped by firms for fees back in the day, then they were pumped by gurus during COVID? They're always going to be pumped by somebody, right? No. So I get what you're saying, right? There's always going to be a pumper somewhere, whether he's on Twitter or he's in a boiler room, right? It takes different shapes and this dynamic will appear in different forms over the years and through different cycles and different generations, but it's the same thing. Go read the book Extraordinary Popular Delusions and the Madness of Crowds, McKay. And it talks about bubbles going back hundreds and hundreds of years, centuries ago. And they might be about tulips or something different and not cryptos. But the way the bubbles work and the gurus and the different players in the story, they're always the same. So, yeah, it might not repeat, but it always rhymes, kind of. What do you like in XLB stress? I gave you a bunch of names, Dawson. We keep talking about them. I'm long Reliance right now. Nucor's finally starting to work. Steel Dynamics looks good. I missed Southern Copper. I'm not thrilled about it. I think Freeport sets up again in the future. And I'm listing some of the largest names in the group. If you go down the cap scale, you're going to find some even more interesting stuff. But go look for yourself. There's a lot of good stuff going on there. And I think we continue to find more and more bullish chart setups that we want to be getting long in materials in the future. IP International Paper. So that's Serby for Chart Request Live. Bring any chart requests or ticker requests to our Tuesday and Thursday, 1 o'clock Eastern time show. It's called Chart Request Live. So we'll be here tomorrow. We'll talk about International Paper then. Cal, Famous Footwear. Really? Really? It's shoes. So with the on, right? On, right? And now the Cal shoes, I must just not be on trend when it comes to what I'm wearing on my feet. I'm still wearing Nikes. I don't know. A lot of apparel names are breaking out, and then a lot of old school apparel names still look terrible. Yeah. ETH had SEC news. Yeah, I heard about it. So the new spot Ethereum ETFs, the most interesting thing about those filings to me, these things are gonna pay dividends, right? They're gonna take the money earned from staking, and I would hope pay a monthly dividend. And Solana, which will be the new or the next spot crypto ETF to come out and be talked about, is going to pay an even bigger yield than Ethereum. I think that's exciting, and that from a marketability standpoint, you have to understand Wall Street's just trying to sell its products, just like any other industry. A lot of marketing, a lot of sales going on Wall Street, right? To be able to say you got a nice big juicy monthly or quarterly dividend in some of these spot crypto ETFs, can make it a lot easier for these advisors to sell. Great for DraftKings. Yeah. DraftKings, I own the common. I own the common in my IRA. And I've been in calls probably, I don't know, 5, 6, 7 different times since early last year. Trading calls along the way. I also would use it, but I have to use the Hard Rock Bets app because I live in Florida, and I don't know, something about the Seminole tribe. That's been going on forever too, one hole. Cracking down on gurus, look up Timothy Sykes. Um, yeah. You ever watch like American Greed on CNBC? Like financial gurus also not a new thing. I know the internet and technology is getting better and better, so gurus can reach more and more people. Um, but they're not new. Yeah, thanks one hole. That's the book for sure. It's great, guys. It's one of my favorites. Valero looks awesome. It depends on your time frame. It's never bad to pay yourself, right? Like we got in the calls. I'm not going to lie. I've already sold the majority of my position just because sometimes when you're in calls, you're leveraged, right? And if you get a quick move, you'll have big gains. And I'm a fan of paying myself because there's new opportunities every day, right? So if something moves faster or higher than I thought it would, probably going to pay myself faster or sooner or more than I planned to. And I'm talking specifically about being in options, and that's what we did with Valero, at least just a few weeks ago when we got into it, which is what I think you're talking about, Curtis. UConn plus DraftKings, free money. They do well, I know mine, they do like, it just again, back to marketing. A part of every business. These sports betting apps tend to do a really good job where I'll just be like sitting on my couch on a Thursday, me and my girlfriend are getting ready to watch like The Bachelorette or something. I'll be like, hey, don't miss Iowa State versus Iowa. The odds will give you more favorable odds if you bet $10 now. It's like, so they know what they're doing. They know what they're doing, and they'll get better and better at it. And that's why I know it sounds funny, or it almost sounds like, speaking of a guru, I feel like one of those guys who's like, hey, it's March Madness, go buy DraftKings. It is what it is. It worked for the Super Bowl. Why won't it work for March Madness? It's kind of like Nvidia. You could call it hype, you could whatever. There's real numbers behind it. I promise you, these guys, DraftKings, going to make a ton of money this month. And they're going to come out and they're going to talk about it. They're going to drop press releases, and Kramer's going to cover it. Just like Nvidia is making real money off of this AI hype. A lot of it's hype for a lot of people. There's also real numbers behind it. And it's not even about that. the chart's working higher. Primary uptrend. You got a beautiful reversal. Every consolidation or corrective wave eventually resolves higher and becomes a buying opportunity. So we're just kind of going back to the well and doing what's been working for us since last year with DraftKings. Yeah, partnership this, partnership that. They're going to continue to make more partnerships. They're going to grow in states like Florida and Texas and California. The market is just absolutely enormous. I think this is, you guys have heard me talk about Uber or Coinbase, with a lot of conviction. I feel the same about DraftKings. I really do. I think this is just an enormous market that they have a stranglehold on right now. So thank you guys all for joining. As always, we will be back same time, same place next week with the next Hot Corner Live Strategy session, 1 o'clock Eastern Time, Wednesday. In the meantime, join us on the morning show, 8:30 to 10 o'clock every morning. Me, myself, JC, Spencer. Join us on Chart Request Live tomorrow. I know I saw a couple chart requests in the chat today. Come bring them, 1 o'clock Eastern Time, right here tomorrow. And as always, everybody have a great week. Trade them well.